Get to Steve Liesman, some headlines from him. Steve.
Hey, David, good morning. Fed Governor Chris Waller saying he is increasingly encouraged that monetary policy is well positioned to slow the economy and bring inflation down to 2%. Waller had been, say, in the summertime and before that, one of the most hawkish members. Now he's sort of neutral to even a little bit dovish. He says monetary policy right now is restrictive and it is contributing to the decline in inflation that we've seen. He's encouraged by the October decline in inflation as well as the jobs report that's also showed a cooling of the job market. The latest data, he says, shows inflation moving in the right direction, but it is gradual. And don't take out the party hats just yet, because he says inflation is still too high and it's too early to say if the slowing will be sustained. He pointed out that there was a reversal of progress in a revision to inflation data earlier this year. So the Fed cannot be sure that it's done enough now to bring inflation down. But he makes a bunch of other encouraging remarks. Says the economy is cooling according to his expectations from those strong numbers in the third quarter. Indications now that there's been a significant moderation now in the fourth quarter. Manufacturing and the service sector both slowed in October, according to data he's looking at. He's going to look through this, but he does point out a number that is worth talking about, that the auto worker strike could shape GDP by as much as 0.5 percentage point. In terms of future inflation, he thinks there's going to be moderation in housing costs as well as wages, bringing down that service side to help ease the inflation numbers that we're going to get. And on the issue of how low is too low when it comes to the 10-year, he says, you know what, even though yields have come down, financial conditions are still tighter than they were, say, a year ago. But it's a reason for the Fed to be careful to not rely on the 10-year to do its work for it. Finally, the Fed, he says, can't rely on higher productivity to push down inflation. Guys, I'll leave it there. But, David, if I could just make a remark, I love the conversation you had with Jim Cramer earlier this morning, where he says he keeps looking at the consumer and looking into the numbers and coming up empty. I'm kind of with him on that with these lower or modest expectation numbers, but we seem to be getting pretty strong spending numbers from the beginning of the holiday season.